In this course, we're going to get into a lot of details about market crashes, how to predict market crashes, and how to prepare for market crashes. But I'd like to start out this course with you can say it's a primer on stock market crashes and why you should expect one in the near future. There's a few things I want to say here. We have a few reasons to predict one. And I'm going to start just by saying that statistically, you should expect a stock market crash on average every 15 years. Now, remember that's an average number. It can happen sooner or later. Like we saw in 2008, that came only 8 years after the previous crash. So we had a bear market. Let's go to Max here. We had a bear market in 2000, and then 8 years later, we had a stock market crash. So don't expect that 15-year average to be a very predictable number. It doesn't mean that 15 years after 2008, in other words, 2023, we're going to have a market crash. It means that on average, there's something that goes wrong fundamentally in the stock market every 15 years or so. And as time goes by, you might see that change. You don't see many stock market crashes on this chart simply because they were small. They look like little blips here. Here's one in 1990. You see, in the long-term scale, the stock market crashes probably won't matter that much to the stock market. Things will continue to go upward in the long run as they have for the past, well, on this chart for the past 50 years. But still, you're not going to live so long, and you don't want to see your entire portfolio wiped out because of a stock market that suddenly crashes and then stays in a couple year-long bear market. You want to know how to protect yourself and when to get out. So the first thing I want to do is convince you that a bear market is coming, or a stock market crash is coming, or a market correction definitely is coming. And we will deal with each of those three terms in a minute on the lecture that comes after this. But for now, I want to give you a few reasons to believe me that a stock market crash is coming. Besides the statistics, we have a lot of gurus also saying that stocks in the market at the moment are overvalued. Even Warren Buffett, the guy who said, if you can't make money investing in the US, then there's no reason to play with stocks, he's now leaving, or not leaving, but he's taking his money outside of the US to invest in Chinese stocks, because he thinks the stock market in the US as a whole is pretty much overvalued. And I'm not a guy who likes to just take people's words for it. I like to look at statistics. So what I've looked at is what's called the Shiller price-to-earnings ratio, which is, you can say it's a composite of all the price-to-earnings of the stocks. It tells you whether a stock is the stock market is kind of overvalued. Now, the historical mean is 16.6, and generally a stable market has a Shiller mean, or Shiller PE of around 15. Right now, we are at 26.4. Every market crash that has happened in the past has happened when the Shiller price-to-earnings ratio is above 25, and we have broken that point. We were actually above that point significantly in 2000 as well, and you can see 2008 we are above 25 as well. So this is a pretty decent indication of when a market's going to crash or when a bear market's going to occur. When you hit that 25 number, things go a little haywire, and we are already above 25. Now, I'm not sure how long this course is going to be out there, but if you're watching this and it's not 2015, well, the Shiller PE is going to be different, and you should probably look it up and figure out whether your risk of a stock market crash is imminent or if it's going to be a ways off. In either case, your best bet is to prepare for a crash, even if you don't believe it's going to happen, and set your portfolio up to hedge against it, to defend against it. And if you're speculative or have a high risk appetite like I do, then you might even want to look for ways to profit on a market crash. So all of those things are things we are going to discuss in detail, step by step, in this course. But overall, be aware that the risk of a market crash is almost always present. The risk of a market correction is always present. and a bear market is something that can often creep up on you when the economy gets bad. So let's take Warren Buffett's advice and look at stocks with a suspicious eye. Perhaps things really are overvalued. Perhaps it's not a good time to be investing. But use your own mind, man. Use your own way of judging whether you think stocks are a decent investment at this time or whether you should look for other types of investments in your portfolio. In either case, at least hedge, at least prepare for a possible market crash or correction. And if you do so, you'll be thanking me and thanking yourself. Because when that happens, you'll be the only one standing around while everyone else is getting hit by waves.